On Tuesday, July 15th AM trading session. Let's go ahead and get right after it. All right, starting off on the daily, that's what we're looking at right here. These are the last 4 daily candles. When I'm analyzing the daily chart, I want to be able to see a very clear narrative at play. I'm always looking for price to book from internal range liquidity to external range liquidity. And when we have price delivering from internal or external, I'm looking for clear draws on liquidity that we can be reaching for. And I always set up my daily chart the same way. So first things first, I will mark off the previous daily low, previous daily high. I always run a fib from the previous daily candle. This is a T-Trades thing. And if I'm expecting price to continue to displace lower, we would not see price move up in to the upper quadrant of the previous daily candle. We would most likely see a wick here below the midpoint and then a delivery below. All right. I want to make note of, we talked about external range liquidity and internal range liquidity. We have recently swept a previous weekly high. Okay, that is a significant liquidity pool, and we did that by entering into a bearish daily fair value gap. Okay, so that's a big source of liquidity. Again, we swept previous weekly high into a bearish daily fair value gap. I am most likely look what price did, right? So yesterday price had this wick up into it, and then a pretty strong bearish close on the day, right? So do we have anything to reach for? Well, yeah, we have a previous weekly low down here, right? I like that. And just to make note, we also had a liquidity raid. So this is another T-Trades. This is a C2 candle, right? Expecting the C3 candle to continue to expand. Everything on this chart is screaming to me lower prices. I do want to make note here. We did actually sweep a swing point here on the daily. However, this chart is and this price action is just screaming lower prices at this point, and I expect this candle to have an open, some sort of a high in the lower quadrant of the previous daily candle, and then a delivery lower. I am expecting lower prices on the daily. I have a daily bearish bias, and we're moving on to the hourly chart. All right, let me pull up the hourly. On the hourly, I'm also looking for clear narrative. Okay, now on Monday, as you can see here, Monday, it looks as though we have a smart money reversal. Okay, so whenever it's almost a very clear, and by the way, this happens all in context, right? This happens when we swept this previous weekly high. Okay, and hold on one second here. This into the bearish daily fair value gap, right? So the fact that we displaced down and created this change in the state of delivery on the hourly, which is evidenced, okay, by these fair value gaps right here, which have been unmitigated. So all of this is telling a story that we are likely to continue lower. Right? This is a very strong indication that we're continuing lower. We have not even come back up to touch these fair value gaps at all, right? Now, when I have a clear change in the state of delivery, I want to try and grab the swing high and the swing low that created that that took the liquidity, and just run a fib and sort of see where we're at, right? So we always expect price to potentially at the -1 and -1.5. That's typically the low-hanging fruit, the first sort of target. Then ultimately we want to see price move into the -2 to -2.5. However, something I learned in Ash Capital, right, the Unicorn University Discord, and from Matt, is that once we start closing on the daily below the -2.5, we can expect price to move lower down into the -4 to -4.5. Now, that also lines up really nice with this previous weekly low, right? So this is, again, I'm looking for narrative that is very easy to see, okay, very simple. The daily was simple for me. Look, we had this reaction out of the bearish daily fair value gap. We swept this liquidity, and we swept a previous weekly high. and we had a displacement lower, creating a change in state of delivery on the hourly, unmitigated fair value gaps here. Now I'm looking for a way to get involved with a price with a move lower. Now, if you've been watching me recently, I've been huge on the 1/3 ADR levels. So let me pull that up real quick, just sort of see. It's a very good indication for me, whether it's typically a good indication that we've made a reversal or that we have a strong draw on liquidity. If we have a draw on liquidity and it lines up with the 1/3 ADR, then I like to be on sides with that trade. Now, we are currently inside of the 1/3 ADR range, but if you look lower, we're not even close to this. So if I'm thinking about getting on sides with a bearish move, I've got plenty of room to the 1/3 ADR, which is like a magnet for price. And below that is the previous weekly low. So all of this is setting up nicely for me to start looking to get on sides with some sort of a move on the M5 time frame, which is my execution time frame. Now, for me to get involved with a trade, I need the hourly to engage some sort of a POI. I use for POIs on the hourly, I use fair value gaps and swing highs. And I'll just make note here that we have a sweep of this hourly swing high. Okay, and we also I want to mark out that we have a London low down here. Okay, London low and Asia low, if they haven't been tagged yet, or if they haven't been swept or traded to, are a great form of liquidity, a great draw on liquidity if I'm in fact looking for lower prices. And because price is fractal, we always, just how we look at this liquidity rate up here, okay, and we look at a C2 candle, right, displacing lower, and then a C3, we're looking for a continuation. Well, the same thing happens here on the hourly. So I'm looking at this liquidity rate. While we swapped a high time frame POI, I am immediately looking for, and this is at the end of the 8 a.m. candle. I start trading at 9 o'clock. So at the beginning of this next candle, I'm trading this. I'm ready to go. Okay, so I'm going to drop down to the M5 time frame, and on the M5 time frame, I am looking for a sweep of liquidity. Okay, which we have right here. Okay, we have a sweep of liquidity. And just to sort of see how this all matches up, right? We're right now we're creating this liquidity rate, right? This wick was our sweep of liquidity, and a move back down into the range with displacement. All right, when we see that, I want to mark off the change in the state of delivery, right? And we are forming right here. I can tell already we are forming a unicorn, right? A unicorn is a breaker with a fair value gap in the middle, and this is not confirmed yet. But a breaker is in this case, a bearish breaker is the lowest down close candle prior to the move that took liquidity, right? And then price has to displace now through it, right? So we do in fact create a unicorn right here, right? And this is the fair value gap. I got right here, right? So we have a gap inside of the breaker. I am going to go ahead and put my limit on at the bottom of the breaker, and if it's possible, I always want to go to the swing high of the swing high that created the breaker, and then I'm going to target the London low. Okay, why? Because it's low-hanging fruit. It still gives me a 1.87R trade, and I've got the 1/3 ADR down here. Yeah, it's possible I could leave a runner. I trade primarily prop firms, and right now mainly Apex, so I don't look to just sort of get whipsawed back and forth on the way that they have their daily drawdown set up, right? So I'm just gonna target a clear draw on liquidity, and it's got to make sense, right? So we're still at the 1/3 ADR down here, which I like to target. But if we have a London low like we do here, that's untouched, that's what I will get involved with. I'm going to go ahead and put in a sell here, okay, with a stop loss at the swing high and a take profit down here at the London low. Now, this trade actually took a long time to complete, but that's okay. The whole time you could tell we were pretty much still on sides. So let's go ahead and push price down. Okay. And we almost wicked out there. Oh, we got to win. All right. So it's really clear on this example, right? How we compare the daily bias with the hourly market structure, and try to understand where price is likely to draw. Once we have an understanding of what side of the market we want to get involved on, it's way easier, right? So we knew we wanted to be involved with shorts. So what do we need? We need a sweep and some displacement back down into the range, creating a change in state of delivery. In this case, not only that, but a bearish unicorn. And then we look to get on sides. All right. Hope you guys got something out of that. If you did, like, subscribe, comment. Appreciate everybody who watches these videos. You guys have a great day.